tell us about your involvement in Islamic banks. When was the first time you got involved? Tell us when, how, and why.
Certainly. Well, my earliest involvement dates back to the mid-80s, probably just before the mid-80s. And I joined a British merchant bank called Kleinwort Benson. That was a traditional merchant bank. I think now in financial services, not many of us remember the merchant banking model. But actually in those days, they were institutions that focused on lots of different, quite individual businesses and their ability to connect and work together to empower and create quite an interesting financial services offering in aggregate. So the merchant bank that I worked for was several centuries, could trace its roots back several centuries, was very engaged not just in the UK and domestic markets, but in international markets as well. I was hired initially to work for the Japan corporate banking desk. And interestingly, at that time, the division that I worked in pretty much included every international banking desk outside of the UK. Next to me was the Middle East banking desk. And this was 1984, I think I said. And very interesting that even at that stage, there were colleagues who were working on Middle East banking who were actually engaged with the early contemporary Islamic banks, particularly in Kuwait and the UAE, I think, and they were working on creating asset flow to manage the liquidity that was being gathered by those Islamic commercial banks through their own fledgling business model. So I was working next to the desk. I was on Japan corporate banking, as I said, and over the next little while, it looked as if it was a pretty exciting, innovative, and unique environment to work in. So I asked whether I could join that. In the late 70s, there were various Islamic banks that were being established predominantly in the Middle East. And literally they were, it sounds amazing now in sort of global environment, financial environment in which we work, that these banks were being created as standalone institutions. And some of the earliest that I can think of were Kuwait Finance House, which wasn't authorized as a bank in Kuwait, but it was pretty much like a bank. It was working as if it were a consumer and commercial banking institution. There was also Dubai Islamic Bank in Dubai, and not too long after that, Qatar Islamic Bank and Jordan Islamic Bank, which were probably incorporated in the early 1980s. So those institutions, despite the fact that they were building on a standalone basis, and nowadays, you know, it seems impossible to think of any major financial institution being created without the connectivity it might have naturally into markets and into peers. But those banks were gathering or mobilizing significant amounts of liquidity through retail customers, and they were looking to find assets to deploy that liquidity into, and also really to grow the scale and the infrastructure of the institutions themselves. So I think that's where London comes in, because the banks did not really have access either to peers in their local markets. Most of them were standalones in one particular country or another, and they were struggling to find the asset flow to invest in, and also the mechanisms that would allow them to manage their liquidity, to access liquidity if they needed to do that in an organised, reasonable and efficient way. And they tended to turn to the international banking relationships they'd had before, provided, and they tended to be conventional banks, those banks could provide solutions that were Sharia compliant as well. So that's where the structuring challenge was at that stage. And if I think back to the early 80s, in London, there were 3 banks that were involved in this at the beginning, and those were Kleinwort, City, and ANZ Greeners.
Tell me about your very first engagement with the Sharia scholars. You mentioned it a few times.
Yeah,
Sharia
absolutely.
Do you recollect the very first time?
I do. Qatar Islamic Bank and Sheikh Dr. Ali Al-Salous, who at that time was head. So Qatar Islamic Bank, I think, was formed in 1984, so around about that time, and probably came in for Sharia validation purposes a year or 18 months later. And they had head of the Sharia committee, and he came in and brought in a translator and spoke no English. And of course, I was pretty junior on the team. I think I was 4 for 4 at that point. So I sat in the corner of the room and didn't say much. We made no eye contact, and he didn't say much to me either. And that was the situation for the next couple of years. He didn't say anything to me at all until on one particular day he asked a question in Arabic and of colleagues, and the translator translated, and then he asked the question again, and then he asked the question again, and then he turned around and said to me, "You tell me the answer to what I'm asking in perfect English." And so I responded, and that sort of broke the ice. And after that, when he visited the UK, and it was quite curious, and if there are any bankers other than me from that time who are not retired, they will tell you that this is the truth. By that stage, there were other international banks who were moving into service provision for Islamic banks. So this is probably late 1980s, early 90s, and he would come to the UK and he would ask for me to accompany his team on their visit to every bank in London, which was a bit awkward because by this stage, dear Dr. Ali, and I had utmost respect for him, but he was quite fierce in his approach. And, sometimes because he'd ask a question several times, I got to understand it was because he wanted to make sure he was understanding it properly and he was thinking and reflecting upon it. But he terrified the London banking community. And so he used to take me on his tours because he said that I could make people tell him the truth. I'm not. I think they were telling him the truth anyway, but it's just, sometimes these things get lost in translation. And whereas his English was perfectly adequate, it wasn't fluent. And so we'd go on these tours around. So I actually became quite well connected with other practitioners in the international banks in London. We got to know each other because, of course, I'd have to phone them up and say, look, this is awfully embarrassing, but the head of Shariah at Qatar Islamic Bank has asked for me to come on the visit. Do you mind? And there weren't many of us, so we weren't that fiercely competitive. And I would do my trips with him. So that is my initial engagement. As you can tell, it's still imprinted. And I'm eternally grateful to him because he taught me a lot, not just in terms of practice, expectation, and in actual fact, he was very insistent that global equities should not be admitted, despite screening as an eligible asset class for Sharia compliant investors. He used to say to me, Stella, even an atom of riba is haram, even an atom. And when he felt that global equities, after screening processes, and he just couldn't personally get comfortable with it, he retired. Mm-hmm. At that point, I just agreed with certain of my colleagues that we would work with a very early stage venture capitalist firm, and we would set up what is now DDCAP with them. They predominantly as the equity partner, and we as what would now be called, I think, the sweat equity, mm-hmm. which is the nowadays. I think I am told from businesses that we invest in that things are very different, and new entrepreneurs keep the majority stake of their business. But I can tell you, as an incubated or accelerated firm, that was not the model back in the late 1990s. Absolutely. So we started up DDCAP because we felt that actually there was such a demand for connectivity. The footprint of Islamic financial services was growing, but there was still this issue over managing its connectivity, managing significant exposures, looking for diversification of asset and also counterparty risk. And we felt that probably as an independent firm, there would be something that we could do to make those connections. And that's how we set up as an intermediary. What I think we hadn't envisaged was that we would be providing the trade execution services that we subsequently became well known at. So HMIC, it wasn't a bank, but it was looking at creating a Sharia compliant savings product for British Muslims that would enable them a savings product that was broadly referenced again to the risk return criteria of instant access bank building society savings products, but as I said, Sharia compliant. The subscription amount was as low as £250, and the fund was accessible over post office counters, which was absolutely extraordinary. I mean, literally, you could have and it was instant access, and it was the most extraordinary investment mechanism, which fully satisfied the regulatory authorities here in terms of the levels of risk that the consumer was taking. It was structured to be very, very low risk. It was a pretty extraordinary standalone product that I think would probably be difficult to put to market as it was nowadays. Now, why do I think that it wasn't more successful? Well, I think because it was independently sponsored. It was very successful actually in some markets. You'll recall it was quite successful in Scotland, on the UK East Coast as well, for various different demographic reasons. It was interesting. I think it had happened fairly soon after BCCI, and although BCCI was certainly not an Islamic bank in terms of the financial services offered to British citizens and British Muslims, for one reason or another, I think a lot of British Muslims had lost their savings and had thought that it was an Islamic bank. So they were very reticent about anything that was branded Sharia compliance, and particularly because HMIC didn't have an identifiable and significant sponsor. A lot of the wholesale Middle Eastern institutional funds were driven back into the Middle East from the attitude and response of the international marketplace, who saw threats in working with Islamic banks that were not apparent to us, and in most instances were not there at all, but actually there was a process of due diligence and engagement. So two things came out of that. First of all, we did a lot of work with our core clients, because all of a sudden we were finding that they were short as it was of transactional counterparties, and some that they'd had in place for 15 years were no longer available to them. And so that caused us to spend a lot of time reworking solutions and introducing banks, in some instances, bizarrely enough, to their own neighbours. And it really brought the conventional banking institutions in the GCC particularly far, far closer to Islamic banks. It also caused the regulators to take a long, hard look at what they were doing, and consider how they would accommodate the requirements. So, for the first time, what do they do about providing central liquidity facilities to the Islamic banks? Like those sort of things weren't there then. So that took us through a growth phase, working very much around the liquidity space again, looking at reciprocal liquidity, starting to look at early stage of capital markets. We were involved in a transaction with an Islamic bank in Qatar with a US industrial, and we were involved also with a US bank that was regional by nature, and quite a sizable transaction. It was our first. We looked to put it together. It was not a treasury type commodity murabaha. It was actually a transaction that was involved in financing of industrial material for the US automotive sector. And in the course of settling the transaction, the funds somehow passed through a regional bank in the US, and there they were for several days while everybody tried to work out what was going on. Diligence was being done. Somebody had seen a counterparty they weren't familiar with, and that was probably the lowest point and the happiest. The lowest point because I thought, this is our first transaction. There are going to be all sorts of costs of this transaction that are going to be very uncomfortable for everybody, and we thought it was groundbreaking, but it has been operationally challenging, perhaps despite our best proof of concept in advance and so on. And then probably, this is early stage, my highest point was at the same moment that in actually working through the settlements team with that regional US bank, I found an individual who headed settlements who had actually worked in the GCC country of the Islamic bank. And there was a certain transparency around that made everything happen instantly and smooth. So it made me realise, you never know what's going to happen, but you need to you can manage things as well as you might, but you can never be certain of the outcome of something new and innovative until the actual point that it's done. So that was quite interesting. We'll have to be very willing to accommodate what we think Islamic finance will be moving ahead, and it may not be the traditional financial services model. It won't be the traditional financial services model that we've all known. I think it's Deloitte that has highlighted the fact that there is going to be the biggest generational transfer of wealth to the millennials in the next couple of years that there's ever been, and it's interesting to see the part that Muslim millennials will play in that here in the Western world as well as in Muslim majority countries as well. So we need to reference the impact that will have on Islamic financial practice, how they want to see the industry evolve. So that brings our focus into new aspects of it, including technology and so on, and looking at how we can support the build out of that and how we can make sure that capital is available and that we are supplementing the growth. And I think, even here in the UK, our regulators are alert to it, and we're all working collectively and cooperatively to try and support it. But in common with the rest of the world, the impact that we can have as a financial industry subset is extremely important. And in taking Islamic finance forward, in my opinion, and not everybody will agree with me, that is a key focus for us, and how through maintaining our core disciplines and upholding the spirit of what we do as Islamic financial services practitioners, we can also be aware of what else is driving financial services and what we achieve to deliver, impact in terms of the focuses of the rest of the world.
So do you think, Stella, the industry has met its ethical aspirations? Some people argue there's aspirational dissatisfaction in the industry. What's your view on that?
Aspiration. I think different aspirations for different generations as well. I think the industry has put down a great footing, but it's a footing that I think future generations are going to take forward, and they're going to build out and evolve in a slightly different way. And I think what will happen now through new technologies and through this focus on impact and Islamic institutional stakeholders, practitioners, ability to take forward the industry with reference to things like the targets and the alignments with the Sustainable Development Goals. I think those also reference to the aspirations of the stewards of our industry over the next few decades as well. So I think in terms of the direction that we will take, we shouldn't beat ourselves too much about what we haven't achieved yet, but we should make sure that we are positioned in terms of how we shape the industry and what the aspirations of those new stakeholders and those new stewards will be. And that's clearly to adapt and develop our industry and connect it more thoroughly into the halal economy, rather than just looking at financial services as a pillar, as an independent pillar. If I would say that's where we haven't quite connected in terms of our aspirational objectives, I think it's because maybe we haven't been at the stage of evolution that we can do that, but we should not overlook the opportunity to do it now. And actually, I think that in terms of broader subsets of sustainable, responsible investment and finance in practice, the Islamic financial sector has an awful lot to offer.